good morning, everyone. Welcome to Inside India. I'm Christine Tan, sitting in for Sri Jegarajah, and here are your headlines. The conflict in the Middle East and a more hawkish Fed casting a pall over the Asian trading session, with the Indian markets likely to come under pressure. Oil prices are also lower as investors wait for President Trump's next move on Iran. Latest data showing India slightly cutting its oil imports from Russia, but increasing purchases of Middle East oil. We'll discuss. Plus, India's markets regulator making some investor-friendly moves, making it easier for foreigners to buy government bonds and for state-owned companies to delist. And before we start the show, let's do a quick check on Asian markets and see how the markets are performing today. As you can see, a sea of red across the screen right now. There's a lot of worries and uncertainty about the Middle East tension, and that's weighing on investors' minds. Investors also on edge about the possible entry of the United States into the Israeli-Iranian conflict. So that is clearly weighing on sentiment across the region. As you can see, the SET, one of the biggest losers, down 1.2%, the Hang Seng down 1.5%, and the Taiwan Index also one of the biggest losers, 1.5% lower. Well, markets are also reacting to the Fed's decision overnight. The FOMC standing pat on rates as expected. Now, the dot plot still indicating 2 rate cuts by the end of the year as policymakers express concerns about inflation and growth. Fed Chair Powell sees the impact of tariffs now trickling down to the consumer.
Many companies do expect to put all or some or all of the effective tariffs through to the next person in the chain, and ultimately to the consumer. Today, the amount of the amount of the tariff effects, the size of the tariff effects, their duration and the time it will take are all highly uncertain. So that is why we think the appropriate thing to do is to hold where we are as we learn more, and we think our policy stance is in a good place where we're well positioned to react.
Meantime, the world has its eyes on the escalating conflict between Iran and Israel. Both countries continuing to send drones and missiles at each other overnight as President Trump keeps the world guessing about his next move. NBC's Ryan Nobles has more.
As rockets rain down in Israel and Iran, President Trump weighing all his options to keep Iran from building a nuclear weapon. According to several current and former administration officials, that includes a possible U.S. military strike.
I may do it, I may not do it. I mean, nobody knows what I'm going to do.
Trump spoke with Israeli Prime Minister Netanyahu.
Said, keep going.
The president saying he's running out of patience with Iran and called on the country to surrender. In a recorded message aired on Iranian TV, Iran's Ayatollah Khomeini scoffed at the idea and said that if the U.S. intervenes, that would cause irreparable damage. But the Trump administration has been in talks with Iran for weeks. Nothing came of them.
And I said, why didn't you negotiate with me before? All this death and destruction.
Trump allies backing the president.
If diplomacy fails, use force.
But the president may need diplomacy within his own party. On Capitol Hill, Republicans joining Democrats on a resolution to require the president to get congressional approval before any action.
We should have some say-so about it, especially if it involves possible World War III, in which it could.
He's fully within his authority to act in that manner, and that is what the commander-in-chief is supposed to do.
And while the president urges civilians to leave Tehran, U.S. officials are coordinating planes and ships to take Americans out of Israel.
Because this is something that's never happened before with all these ballistic missiles. Obviously, it was not safe to stay there. I had to just come back.
And back here on Capitol Hill, Defense Secretary Pete Hegseth would not reveal the details of the administration's options, but said that once the president makes a decision, the military will be ready to act. Ryan Nobles, NBC News, Washington.
Well, the big question now is if the U.S. will get involved and if it will attack Iran's Fordo nuclear facility. Dan Murphy spoke to Israel's President Isaac Herzog and asked him that. That's part of the conversation.
Let me take you back to this decision to potentially strike Fordo. When will it happen? And if so, is Fordo the final target?
So you realize there's no way I'm going to give you an answer about any of these or technical decisions and things of this nature, but I can say that we all understand that nuclear weapons are the most dangerous weapons for humanity. For 80 years, the world has known it, and for decades, the world has decided that Iran must not have nuclear weapons. And we discovered that they're cheating, that they're rushing to the bomb. And over the weekend, there was a clear decision of the International Atomic Energy Agency in Vienna, which has reaffirmed it following a report of its Secretary General. So, one has to be tough sometimes in order to remove imminent threats. That's exactly what we're doing.
Well, more of Dan's interview with the Israeli President Isaac Herzog coming up on Access Middle East at noon, Singapore, Hong Kong time, 4 a.m. GMT. Be sure to stick around for that. Well, let's check the Indian markets coming online in less than 40 minutes. Now, here's what the GIFT Nifty futures are indicating right now. As you can see, following the overall trend lower, signaling a weaker start as far as the Nifty is concerned. And dollar rupee standing at 86.5940. Well, Indian Prime Minister Modi speaking to President Trump during the 35-minute phone call. India says Modi clarified that there was no mediation from the U.S. in its recent skirmish with Pakistan. India continues to say that the two neighbors talked it out directly.
Prime Minister Modi clearly told President Trump that during the entire course of the event, India-American trade deal or mediation between India and Pakistan were never discussed at any level. All discussions related to cessation of military action took place directly between India and Pakistan through existing channels of the two armed forces and took place at Pakistan's request.
Well, after the two leaders spoke, Trump reiterated that he, quote, stopped the war between India and Pakistan and that the U.S. will do a trade deal with India. Well, the call between Modi and Trump came ahead of Pakistan's army's chief visit to the White House. President Trump hosted Field Marshal Asim Munir over a lunch and said they discussed Iran. This is the first time a U.S. president has hosted with a Pakistani military chief at the White House.
Well, they know Iran very well, better than most, and they're not happy about anything. It's not that they're bad with Israel. They know them both, actually, but they probably, maybe they know Iran better. But they see what's going on, and he agreed with me.
Well, we've been tracking oil prices, and here's what the benchmarks are doing right now. Let's take a look. Brent crude actually at this point in time at 76.55, trading lower, and light crude at 75.2. Well, amid all the geopolitical tensions, India's oil imports falling over 12% in May compared to April. Imports from Russia, too, seeing a slight decline last month. Remember, India is a net importer of the commodity and gets 90% of its oil needs fulfilled by imports. One of the biggest refiners in the country, Reliance Industries, also imported less oil last month. Reliance's overall oil imports dropped over 26% in May, and shipments from Russia were down 37%. Let's talk more about the energy picture as well as the overall impact on the Indian economy. G. Chokalingam is founder and head of research at Economics Research. Chokalingam, good to have you with us. Let me ask you first about India reporting less crude, obviously, from Russia, but somehow increasing its imports from the Middle East. What can you tell us about India's diversification strategy when it comes to crude? Is there anything to worry about when it comes to energy security?
Yes. India has limited options, as you rightly put it. More than 85% of the oil requirement is met through imports, and 40% of oil import is flowing through Strait of Hormuz. And 60% of the oil requirement is from the Middle East. So definitely it would apply some pressure on import bill. But however, the fact is that, you have a classic example of Ukraine war. Before war started, oil was around $97. But before this Israel-Iran conflict, it came down by over 30%. So my strong faith is that oil intensity in the global GDP growth, as well as oil intensity in the war, are coming down. And unless oil price goes to triple digit around $100 per barrel, Indian economy as well as Indian market would remain quite robust. That is my firm conviction.
Everyone is worried about U.S. involvement in the Israeli-Iranian conflict, and investors clearly on edge. What do we know about New Delhi's or India's national oil and gas reserves and inventories at this point that New Delhi can use under emergency use?
We don't have like U.S. Huge oil reserves. The only comfort is from the domestic economic factors. Recently, wholesale inflation has hit a 14-month low. The retail inflation has hit a 6-year low. Already we have been sitting on a huge benefit of cheap oil in the last 3 years. The Indian basket of oil came down by 34% since 23, and the forex reserves also near record high. So instead of hoping on oil reserves, we can hope on these domestic factors to tide over all possible short-term pressure coming from further hike in the oil prices.
A lot of people are looking at the Straits of Hormuz, and that seems to be something on investors' minds. A lot of questions about whether supply will be cut off if Iran chooses to block that route. Where could India potentially turn to for a shortfall in oil, in crude?
Obviously to US, the share of US oil in Indian basket of import is still very low. That is one possibility. And only 40% of the total oil import is flowing through this Strait of Hormuz. So the remaining 60% is from other countries or other routes. So therefore, there is a lot of scope to increase oil import, from US, perhaps, depending upon political constraints, even from Russia. So therefore, you have a little bit of flexibility because still majority of the oil is flowing to India outside this Strait of Hormuz.
India's energy security clearly front and center here, and India, we know, is investing heavily in renewable energy. How far away do you think is India from energy resilience?
At this rate, certainly, it's very difficult to reduce import dependence less than 80%. It is hovering around 87-88%. Of course, there are reports of big oil reserve find in Andaman, one of the areas of India's territory. But even if they find a lot of reserves, it is going to take years. So at least for next 3 to 4 years, the options are limited. We have to depend on import of oil from the world.
Chockalingam, you've always been bullish about the Indian stock market. Do you see the growing geopolitical conflict in the Middle East becoming that black swan that everybody is fearful about, that could derail any move to the upside?
Yes, it would be. Certainly, only if oil price goes to triple digit and stays there for very long. Because India, for India, the oil bill is the most critical because all of us know that it is linked to your forex reserves, your inflation, corporate earning, everything depends on, the oil, even fiscal imbalance. In the past, if you look at when oil price shot up to $140, there was a compromise on the fiscal balance as well, because there was a compromise on the duties on fuel. So therefore, it becomes critical. It can change India's equity story, provided oil stays in triple digit for more than a couple of quarters or for a year or so. Otherwise, India's story would remain very strong because of one massive structural change, that is the robust inflow of retail investors. It was around 93 million in 2022. Now it has more than doubled to 220 million. So the domestic story is strengthening. Of course, we need to watch remain alerted about the oil price, whether it goes to triple digit and stays there for very long.
Overnight, we had market regulators easing restrictions on foreign investments. How much of a boost could that give the Indian market?
Definitely, I mean, the FIs would come back to India in a big way because last 2 years their inflows are quite limited. Even in case there is any setback in terms of inflows, today if you look at the domestic institution and domestic retail investors, they account for almost 1/3 of total equity holding, and so therefore the promoter holding plus the domestic institution and domestic retailer holding can continue to manage. That is why the broader market was very strong despite FI selling in the recent period. So therefore the structural change in the stakeholding is also quite favorable, and that also mitigates the risk coming from the FIIs.
So if that's the case, what would your advice be to investors wanting to invest and put money into the Indian market?
Certainly, yes. There are a lot of stories in the small and mid cap. The FIIs need to look at that space because that is where stocks have gone up 20 times, 40 times, even 100 times in the last 10 years. So that is where the lot of attraction is because in the large cap, you have a 7-8 sectors dominating where you have a single-digit growth syndrome in terms of volume growth year on year. But you have over 4,000 stocks in the small and mid-cap space where you have a lot of unique growth stories, deep value stories, unlocking stories, even the merger and acquisition stories. That is a story not only the retail investors, even the institutional investors should look at them.
What do you like? What sectors do you like, Chokeng Leom?
Public sector banks. There has been a massive structural change in the Indian public sector banks in the last 10 years. The net NPA or gross NPA, that is a parameter of quality of assets. If you look at in the 10 years back, the gross NPA was as high as 16%, which has come down to 3% for most of the public sector banks. Even the net NPA, non-performing assets after provisions, which used to be even 8-9%, has come down to around 0.5-0.6% for majority of the public sector banks. And second, what was considered as a pain point, having a lot of branch network, has proven to be a positive development now when the deposit growth is in single digit as against 14-15% growth in the recent years. The public sector banks are able to retain the low-cost deposits because of massive branch network in the rural and urban areas, semi-urban areas. So that is another structural change which is helping them. So this is the one segment I am extremely bullish, that is public sector banks.
Banks obviously will be impacted by what happens on the rate front. We had the RBI cut its benchmark repo rate by 50 basis points almost 2 weeks ago. Third rate cut in 2025, and the largest single cut in over 2 years. RBI now seems to have shifted its policy stance from accommodative to neutral. Where do rates go from here?
I think the reversal of interest rate cycle, the continuation is unavoidable. Yes, subject to this Iran-Israel conflict. As I mentioned earlier, if oil price goes close to $90 or $100 per barrel, then the rate cut would come to a standstill. Otherwise, the aggressive rate cut would happen because last 3 years we had a very good monsoon. Last 2-3 years we are having a record level of food grain production. As I mentioned, the inflation is at record low levels, and agri sector is doing extremely well. And therefore, the rate cut would continue. Another 100 basis cut would happen within this fiscal year, subject to the ongoing conflict between Israel and Iran. It all depends on the oil price. Otherwise, the reversal of interest rate cycle would continue. The banking sector, yes, there is apprehension that net interest margin would come down because of the lending rates going down. But if you see the interest rate cycle in the last 20 years, that's a concern only for 1 or 2 quarters. Ultimately, the banks realign both lending and deposit rate, and they maintain the profitability. So therefore, I believe the reversal of interest rate cycle would continue.
With rates heading lower, what's your outlook for the rupee?
Pardon? Beg your pardon?
With rates heading lower, where do you see the Indian rupee?
Rupee, again, it doesn't depend only on the interest rate because interest rate cycle doesn't fully explain the rupee exchange rate. It also depends upon the flow of FDI, NRI deposits, remittances, as well as FI investment. So therefore, the reversal of interest rate cycle may not help rupee exchange rate to appreciate significantly. throughout this FY26, it should hover around 85-86 rupees per dollar. Because the oil price has bounced back around 10% from the bottom. The net FDI inflow is also not robust, and therefore I am not too optimistic on rupee exchange rate recovering fast.
Chokalingam, before we let you go, we know that exports is a major contributor to India's GDP. All eyes on that trade deal between India and the US. You hopeful we could get an interim deal by July?
I hope so, because the deal with the US is very, very, very important. Although the exports accounts for only 10% of total GDP, goods exports, the service exports are predominant, and the reliance on US economy for the service exports is quite big. Service plus pharmaceutical export is the dominant one for India. So, and for the last 20 years. 20 to 30 years, we have been perennially having a lot of deficit on the goods exports most of the time. And this is the time to correct. And therefore, I am hopeful that the FTA would be signed between India and US, within 1 or 2 months. And that would be very critical for Indian economic story as well as for market story.
Chokalingam, thank you so much for your time. Good talking to you. Thank you so much for your insights. G. Chokalingam is founder and head of research at Economics Research. Right. Coming up, an acquisition that became a cross-country political saga. We'll tell you how Nippon Steel's $15 billion takeover of U.S. Steel reached its end and what's the way forward. Stay tuned. And welcome back. The 18-month saga of Nippon Steel and U.S. Steel now reaching its closure. Lin joins us now with the details. Lin, what's the outlook for Nippon Steel now?
Yeah, hey, Christine. So as you say, it's been a long saga marked by obstacles when it comes to politics, when it comes to regulatory hurdles as well. We heard earlier from the CEO of Nippon Steel hailing this transaction as being crucial for its network of global growth and pushing back as well against concerns that handing that golden share to the US government would affect its autonomy going forward. Certainly for Nippon, in a macro environment environment where its own domestic growth is flatlining, global growth is soft, and also, there is concerns around Chinese overcapacity. It really saw US Steel, the US market, as being crucial, particularly for the sale of its high-end or high-grade steel, and particularly for the automakers as well, along with, of course, its India strategy, which it has been pursuing in recent years. It does have a JV there. It's looking to up its production in terms of one of its production facilities in the West. So that is the benefit of this transaction, but there are concerns around how it's going to be able to fund some of its commitments, because along with the golden share, it's also agreed to provide an additional at least $11 billion in investment into US Steel over the next couple of years. And already activist investors have expressed concerns around whether or not there could be shareholder dilution. And on that front, we really look ahead to the AGM that is coming up next week to see some of the questions that are likely to be raised there. Christine.
Right, Lynn, thank you so much for that. Lynn there, talking about Nippon Steel. Let's take a quick look at gold and see where that yellow metal is trading right now. Looking at the chart there, as you can see, all that global uncertainty really pushing investors to get into the safe haven of the yellow metal. It is now trading slightly higher, stabilizing at 3,371. That's spot gold. Right. Coming up next, the Indian markets, regulator easing regulations for foreign investors. We will talk about how it will fare in the markets today after this short break. Welcome back. You're watching Inside India, some of the stories we're keeping tabs on outside of India. The U.S. is now resuming student visa appointments, but with tighter new guidelines, applicants' social media will now be subjected to more thorough vetting. Consular officers have been ordered to screen for perceived hostility towards the United States and to identify individuals who, quote, demonstrate a history of political activism. This comes after the Trump administration first ordered its missions to stop scheduling appointments last month. The European Union has reached a deal to fund defense investments. The $1.73 billion deal is part of a drive to rearm. To get funding from the scheme, at least 65% of the costs of components must originate in the EU region. And in Thailand, Thailand's Prime Minister, facing a key setback as the second largest party in the country, withdrew from the government. Paetongtarn Shinawatra and her ruling coalition now only have a slim majority. This is the PM comes under fire for a leaked phone call in which she blamed her own military for the recent border dispute with Cambodia. The PM defended the call, saying she was simply negotiating and trying to maintain peace, and criticized former Cambodian leader Hun Sen for leaking a recording of the call. And the Fed, as we mentioned earlier in the program, the Fed standing pat on rates, but warned of the impact from tariffs, and that reflected in their macroeconomic forecast too. CNBC's Steve Leisman has the details.
The Federal Reserve keeping interest rates unchanged for the sixth straight month at a range of 4.25% to 4.5%, but the Fed chair warning markets in his press conference that the inflationary effects of tariffs could be coming soon.
Every outside forecaster and the Fed is saying is that we expect a meaningful amount of inflation to arrive in coming months. And we have to take that into account.
The Fed's forecast showed that real GDP is expected to come in at 1.4% in 2025. That's down 0.3 from March. The unemployment rate, 4.5%, up 0.1. Core PCE inflation at 3.1%, up 0.3. But the Fed funds rate unchanged at 3.9%, still showing 2 rate cuts this year. This is the second forecast in a row that the Fed has predicted a more stagflationary outcome for the economy of weaker growth and higher inflation. At the same time, Fed Chair Powell was clear that the forecast suffered from a huge amount of uncertainty.
We haven't been through a situation like this, and I think we have to be humble about our ability to forecast it. So that's why we need to see some actual data to make better decisions. We'd like to get some more data. And again, in the meantime, we can do that because the economy remains in solid condition.
At the very least, all of this raises questions about whether the Federal Reserve will feel confident enough in the inflation outlook to meet market expectations of a first rate cut coming in September. Steve Leisman, CNBC Business News.
Well, we are counting down to the market open in India, and this is how we are shaping up for that particular market. As you can see, the Nifty 50 futures pointing to a weaker start at 24,700. And 94, and the Indian rupee stands at 86.53. And let's quickly check on the government bond yields, Indian government bond yields, that is. 2-year bond yield sitting at 5.72. The 10-year, as you can see, a bit to the upside there, 6.279. Well, today there was news. The Indian market regulator, SEBI, has now eased regulations for foreign investors who buy government securities only. Those investors no longer need to disclose their investor group details as per the new norms. In an interview with US last month, Chairman of SEBI, Thunin Kantapande, told us what the regulator has been doing to address concerns of foreign investors eyeing Indian markets.
We've actually accelerated the engagement process with the FPIs. We have an FBI outreach cell which can be reached out to an email, the specific email. And there are also web programs through video conferencing being done in order to learn our changes and modifications of procedures. And we have responded to some of the difficulties that the FPIs might be facing in terms of registration and also tracking their applications. The application processing time for registration has come down considerably. and the average time taken will be about 30 days now.
Well, let's talk to Kranthi Bathini, an equity strategist at Wealth Mill Securities, joining us now live from India. Kranthi, good to have you with us. When you look at the kind of easing of restrictions that market regulators have put on foreign investors, that's a good thing. But when you look at the timing of it, at a time when markets are concerned about increasing tension in the Middle East, how much support is this going to give the Indian market when it opens today?
Definitely, it's going to be a positive for the markets. Of course, the geopolitical escalations have been weighing on the market, creating some kind of extra pressure on the market in the medium to short term. But any kind of ease of doing business, any kind of reduction of compliance is concerned, definitely it's a welcoming move. And it's a positive signal for the market participants to focus on Indian markets. Definitely, it's going to have a positive impact in the market in the medium to long term.
When you see the flows coming in, could it push the Nifty to really test that key 25,000 level?
Christine, you are absolutely correct. It was a sentimental as well as a strong resistance level for the markets in the medium to short term. Of course, in the previous fortnight, Nifty could able to hold on to the 25,000 level. But as and when the Nifty, one of the key indices of Indian markets, when it rises above 25,000, something unusual is coming on the way. It can be in terms of the geopolitical escalations. Last time it was the geopolitical escalation between India and Pakistan. And this time it came in the form of Iran and Israel. The global geopolitical worries have been weighing on the market at this point of time. Markets are in a positive zone. Foreign portfolio investors have been investing in India in a staggered manner. Definitely, in the next coming weeks, once we witness any kind of some kind of a de-escalation of geopolitical tensions, and also one of the key worrying factor for Indian markets at this point of time is the rising crude oil prices. The crude oil prices have been going up vertically. Nation like India, which imports 80% of its energy reserves, any increase in the crude oil prices definitely is going to weigh on the inflation. And Indian Central Bank have been started the reduction of interest rates because the inflation is at a comfortable level. But any unforeseen rise of crude oil prices due to these geopolitical escalations, that's going to create some kind of a knee-jerk reaction with respect to the inflation is concerned. So that's where the market has been overhanging to come to the range of 25,000 level at this point of time. If we see any kind of a consolidation in the crude oil prices, and if we can get some clarity because of these geopolitical issues, definitely Indian markets are inching forward about 25,000 level.
Okay, if the markets right now are simply on really nervous whether the U.S. is really going to get involved in the Iran-Israeli conflict, if things do escalate, could that be the black swan for the Indian market that could pull things lower, that could drag things lower?
Christine, as per the Indian markets are concerned, the domestic macros are quite strong. The external events like the black swan kind of events can impact any of the markets at any point of time. That is one of the inherent risk of equity markets. So any kind of de-escalation can be a positive. Any kind of escalation and a rise in crude oil prices that's going in the case of crude oil prices going above $100 per barrel, definitely it's going to create a negative impact on Indian markets in the medium to short term. So one of the key parameter we look forward in the medium to short term right now at this point of time is the crude oil.
We also have SEBI changing equity derivatives expiry days for the stock exchanges in India. Just how will that impact investors?
In terms of the changing the expiry days, settlement days for the Nifty as well as for the Sensex, these are the technical adjustments the regulator is doing. But by and large, the settlement days adjustments for Nifty to that is National Stock Exchange towards Tuesday, and for the Sensex, that is Bombay Stock Exchange, BSE Limited, to Thursday. This is by and large, it is not going to have greater impact on the investor fraternity is concerned. By and large, derivatives are the hedging tools, and also the traders can use these, normally tend to use them as a speculative activity. So it is going to have impact on the trading volumes in the medium to short term. With respect to the investors are concerned, there will not be any greater impact because of these settlement days, but it's going to have some kind of impact in terms of the volumes of the exchanges are concerned in the medium to short term for the derivative traders are concerned in India. But in terms of the market performance is concerned, it's not going to have any impact in the medium to short term. But it is preliminary stage. The regulator has just given the nod to change these dates. We need to wait and watch how the things and volumes are going to be. We are just at the initial stage of discussions.
Okay. You mentioned earlier about higher oil prices. Everybody's wondering how that is going to impact the earnings of Indian refiners. Is this something you're watching closely?
Definitely. Oil prices are what we call in India is joker in the pack for the Indian markets. So the Indian market, the crude oil has been below the $60 per barrel, which given a comfort to the Indian markets in the past 18 to 24 months. But anything above this range is going to have a margin impact on the company's earnings, and it's going to create impact on the inflation, where the central bank in India started reducing the interest rates. If the crude oil is going to be at an elevated level, if the inflation is rising further, the reduction rate cycle that started by the central bank can be paused. This is also one of the key important thing we are going to see. And also any increase of elevated level of oil prices, it's going to have impact on the paints, the manufacturing, and also the infrastructure. And it's going to have a whole lot of sectors are going to impacted because of the high crude oil prices. Because since the economy is net importer. Yeah.
Where do you see the RBI rates? Where do you see the RBI taking rates? Because it cut rates by 50 basis points about 2 weeks ago. What is the rate outlook and the impact on the rupee?
In terms of the rate cycle, what RBI has given is the current monetary policy committee the central bank have surprised the state. Normally, the Indian central banker have been stringent in terms of the rate cycle are concerned, and we always maintain a very tight monetary policy. But given the global uncertainty and also the impact of trade tariffs and some signs of looming growth, and also the cool off of the inflation, we're having a very good monsoon in India. So the early signs are expected to, the inflation is at the comfortable range of RBI. So if this inflation is going to be in the comfortable range of RBI, we can expect some more rate cuts from Reserve Bank. But right now, as you mentioned, the geopolitical escalations and the crude oil prices came in between, just like seems to be a black swan kind of event at this point of time.
Kranti, we had an earlier guest who said that he liked private sector banks. Is there a sector that you like particularly when it comes to investing in India?
Definitely. Private sector banks in India, these are the franchises of growth, and also banks are considered as epicenter of growth in India. And the banks had a very long consolidation phase in terms of the stock prices are concerned. And many of these banks, they cleaned up their books in the past few years. So both the private sector and public sector large cap banks looks very attractive to me on a longer term basis for the investors. These are the franchises of growth for the investors, the global investors looking to invest on Indian markets. And also the defense stocks, especially the sector and the manufacturing sector, have done phenomenally well, and these stocks have become what I can say, they've given a multifold return in the last few years. The defense sector, any dip in defense sector, because these stocks, companies are trading at premium valuations. But given the kind of outlook for these companies and also the order book and also the domestic manufacturing focus of Indian administration is concerned, the defense sector also looks very attractive for a medium to longer term perspective.
Okay, so you like the defense sector as well. You spoke about manufacturing. Everybody's looking at how India stands to benefit from the reliance on the world's, on firms' reliance on China when it comes to global supply chain. Is this something you think you could benefit India in a big way?
Definitely. It's going to increase the manufacturing, and also every producer is looking for some kind of alternative. That the best favorable location seems to be India for them, and the iPhones, Apple iPhones are produced. One of the highest manufacturing location is in India at this point of time. That shows the heightened interest with respect to Indian manufacturing is concerned.
Kranti, we have LG Electronics looking to relist its India unit. What are the conditions in the market, do you think, in terms of timing? Is this something you're watching closely? Is this something you're interested in? Is this something that is going to be of interest to the markets?
With respect to the LG Electronics is concerned, the consumer appliances, and as the rising disposable incomes of Indian economy is concerned, there is a heightened interest with respect to the white good and the home appliances manufacturing and sales are concerned. And a name like LG Electronics, one of the strongest player and which has been successful in the past 2 decades on Indian markets, and they aware and they understand the Indian consumer very well. So they're trying to raise around $1.5 billion from Indian markets. And what we witnessed is a brief pause of these primary markets, raising money on Indian markets is concerned. After the markets got stabilized around 24,500 range, we can see the slew of IPOs, the companies raising money from Indian markets due to the positive sentiment and also the strong liquidity is concerned. I believe it's the right time for LG to come into the Indian markets.
All eyes also on that trade deal, Kranti, between US and India. You hopeful we could get a deal by July?
Yeah, we are expecting the trade deals across the globe. They're turning twists and turns. You know more than me how things are taking place. But the Indian administration have a very cordial relationship right now with the US administration. So we can expect a very positive kind of a deal, which is going to be beneficial for both the countries with respect to the US-India trade deal is concerned.
Kranti, great talking to you. Thank you so much for your insights.
Pleasure,
Kranti
Christine.
Bathini is equity strategist at Wealth Mills Securities. Right, we're keeping tabs on central bank action here in Southeast Asia as well. Plenty of that happening. JP Ong joins me now on the set. JP, what's on your radar?
Well, what's on our radar is at 3 p.m. Singapore Hong time, the Bank Central in the Philippines set to make their policy decision. It also comes about 12 hours after the Federal Reserve made their decision to keep rates unchanged. Now, whatever the Federal Reserve does, Christine, is usually on the back of their minds, or on the, at least something that central bank governors across this part of the region glance towards, because it will dictate also whether or not they can actually narrow or perhaps improve on the rate differential. Most central banks, especially the emerging market ones here, tend to have a bit of a premium actually against the Federal Reserve, because it does create a premium that attracts or makes it a little bit more attractive for foreign funds to invest in those particular markets. Now, the Bank Central and the Bank of Indonesia have a bit of a premium actually right now, and while it's hard for the other banks like in Malaysia and Thailand to actually improve that right now, there is scope actually for both of them to improve that, because the BSP has that 1 percentage point a premium actually over the Federal Reserve. So they have some room to actually cut. And that is because there is also a softer inflation in the Philippines and also signs of softer economic growth that might necessitate a little bit more policy action from them. Surprisingly, though, the Bank of Indonesia, while they seem to be in a similar boat, actually decided to keep rates unchanged the other day. And that's because Peri Warjio, the Bank of Indonesia governor, said that they're watching out for rupiah stability at the moment. And basically, because of the geopolitical concerns, the rupiah stability might be something they'll have to be a little bit more careful about. If you take a look at how currencies in Southeast Asia have performed, Christine, you'll notice that most of the majors have gained against the U.S. dollar, with the exception of the rupiah, just showing that there's a little bit more intricate volatility surrounding that currency than others. And this is something that we're going to be watching out for. In the Philippines case, they did say that while the peso has weakened about 57, Bangko Sentral Governor Eli Romulo said that right now it's futile to actually try and intervene because a lot of this is geopolitically driven, and thus any action might actually be a little bit perhaps ineffective actually on their part. So for them, a little bit more tolerance with regards to the volatility around the peso. But for the Bank of Indonesia, the rupiah's volatility is perhaps a little bit more important vis-a-vis how the Bank Central is viewing their own local currency.
A lot of geopolitical uncertainty right now. Inflation fears. We had the Fed overnight keeping rates on hold, and central banks going to be something. Is this something that central banks are going to figure out and try to word into their sentiment? How is this going to impact their outlook short term?
Well, I think at the moment it'll be a case-to-case basis, and it'll also depend on how the central banks tend to order their priorities at the moment. So for the Philippines, it seems that right now economic growth will be a bit more important than peso volatility or weakness. But for Indonesia's case, it seems for them right now the number one thing they'll have to do is to try and stabilize that currency, despite the fact that they still have some room to ease and perhaps support the economy. So for them right now, front and center is the rupiah. For the Philippines, going to be trying to at least bolster a little bit some of that economic growth.
These are uncertain times, JP. What can I say?
Exactly.
Yeah, thanks for that. JP Ong there talking to us about central bank action today. Well, Indian markets have joined the trading day. Let's track some of the markets moving stories in the region after the short break. We're back in 2 minutes. Indian markets online. Let's check the Nifty 50 and see how it is stacking up. As you can see, as the futures indicated, it's signaling, it's trading at a weaker open, weaker start as 24,802. The 25,000 resistance level is going to be key going forward. Dollar rupee at 86.53. Let's look at some of the movers in the Indian markets today. Ather Energy shares trading to the downside, 0.9% lower, 320.75. This e-scooter maker plans to double its retail network in the country to 700 centers by the end of fiscal 2026. All part of its plans to strengthen its presence in India's North Aether Energy. Also launched a new Maharashtra facility, which will go towards boosting its annual capacity for electric two-wheelers. We're also watching shares of Reliance Infrastructure, the Anil Ambani-led construction firm partnering with France's Dassault Aviation. The two companies will make Falcon 2000 jets in India as part of India's aim to increase domestic production of defense equipment. Dassault said it aims to deliver the first made-in-India jets by 2028 for corporate and military use. Reliance Infrastructure shares trading to the upside, more than 4% higher, 403.20. Well, Air India will be cutting its international flights involving its wide-body planes by 15% in the coming weeks, and which will last till mid-next month at least. The airliner citing ongoing safety inspections and operational disruptions in the wake of the deadly Dreamliner crash last week. Multiple Air India flights were cancelled after the incident. And that's all the time we have today on Inside India. Keep on watching CNBC. Access Middle East is coming up next.